Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick, who's in the studio. So we hear a lot about Bitcoin-related ETFs, but now investment firms seem to be diving into Ether ETFs. Tell us the latest.
Good morning. Yes. So the Kelly investment firm, run by Kevin Kelly, filed for a Ether futures exchange traded fund yesterday, which is the first move after several Bitcoin futures ETFs were approved for launch by the SEC earlier this year. But the SEC also required, or asked at least, several of these same issuers to withdraw their own Ether futures ETF applications. So what Kelly is doing here is trying to launch a product, or at least applying for a product that the SEC has already more or less explicitly said it's not interested in right now. And the question is, has anything changed, or is this, an effort to, move this conversation along?
Yeah, why go through the hassle of that? That's exactly what I was going to ask you just now. Why go through the hassle of all this if the SEC has already said, yeah, no?
It's very possible that the SEC just wanted to get the Bitcoin products out first because Bitcoin has been, regulated and, has fallen under the SEC's jurisdiction. Bitcoin has been regulated as a investment in the U.S. for a lot longer than Ether has, and it's only been recently that we've seen some of these Ether futures products to begin with launch. The first one came out last year, so it's very possible the SEC was just waiting to get the Bitcoin product out so that they could say, hey, we have this, and here's how it works, and here's how it looks like, and here's what we have to do to look at this, and now maybe they can focus their attention on Ether futures. Or it's very possible that Kelly here is just trying to see take the SEC's temperature on if anything has changed in the last 3 or 4 months.